All right. Welcome to this episode. Now, in this episode, I'm going to expose you. I'm going to expose you to what we call balanced fund. Okay. So, balanced fund is one of the lucrative investments. Not just lucrative investment, but it is one of the pocket friendly, or should I say pocket friendly? Really, it's affordable. Okay, it's one of the investment that don't require a huge capital to start. So just like other investment vehicles that I've talked about, today also I want us to see or take you through this type of lucrative investment vehicle, so that at least you can make something out of this information that I'm going to share with you. So now when we talk about balanced fund, it's not really something so complicated or complex, but if you're getting this for the first time, or maybe if you've heard about this, I want you to pay attention, so that at the end of this session, or after you going through this video, for anybody who will come across this video, I hope it will give you the in-depth information that you really need for you to start this type of investment, if it is applicable on your end, or if it is you can have a desire to have this type of investment. So when I say balanced fund, ideally there is two terminologies, or it suggests two terminologies, that is balance and a fund. So for a fund, I say that when you hear the word fund, it means, in the investment context, then it means a trust. Okay, it means a trust or a collective investment scheme. Okay, so balanced, if I say balanced fund, I mean it's just a trust that is adopting an investment strategy, that is an investment strategy that is balancing some of the investment vehicles, okay, or investment assets or securities. So the word balance just means that the funds or the money collected, or pool of fund collected in this arrangement, is being invested in a balanced portfolio. Okay, so I want to take you through, or I want to tell you which portfolio, which type of assets that we can have in this balanced fund, and how do balanced funds work. Now, balanced fund is one of the mutual funds, or one of the unit trusts, one of the unit trust investment vehicle that is, like I said previously, is affordable. So without saying more, or without saying much, and I want to quickly go into features of this type of investment. Now, previously I talked about equity fund, which I say that it is purely investing in a portfolio of stocks, and I also explained that what does the word stock mean, or securities means. So stock is when you invest in stock, I say that it just means that you are buying what? you are buying a stake. You are buying a stake in a company. Okay, you are buying a stake in a company with the motive of having dividends when the company declare dividend, or having a capital appreciation. Okay, and if I say capital appreciation, means that when the price at which you bought the shares, I mean when the current price of a stock is higher than the price that you use, or the price that you used to buy, or the price at which you bought the stock, or the cost at which you bought the stock, then we say that you've realized what we call capital appreciation. So the main reasons why people get into stock investment in the context of financial benefit is dividends and capital appreciation. So when you invest in equity fund, then it means that the money collected, okay, like I've said, fund is just a CIS, or is a collective investment scheme. So the money collected will be invested in what? All of it will be invested in range or various stocks, depending with the fund manager that you are dealing with, or the fund manager which you've given the responsibility of doing that on your behalf. So then also I talked about a bond fund, and I said that bond fund, which also is called a fixed income fund. Okay, bond fund is also called fixed income fund because it's composed of fixed income securities, and fixed income securities are for like bonds. So we say that they're fixed income securities because of how the investment work. Okay, how the investment work. So in this, now we are going to talk about a balance fund, which I've said that the word balance is just insinuating the strategy of that fund. How are they coming up with their portfolio? What is the strategy of developing their portfolio? So the portfolio in a balance fund is balanced, as the name suggests. So it is balanced with what? So but major or majority of balance funds are usually having a portfolio of bonds and equities. And as you know very well, you know the features of equities, or if I say equities, I mean stocks. So you know the features of stocks. Stocks are attributed to, or they are having attributes of potential, but they have a potential to high returns, and also they have potential to high risk. So they are having high risk return. Okay, high risk return, or high risk high return, something like that profile. So that's the profile of equities. So the equities, as you know, it's usually good for those people who are having what we call appetite for high interest, and they're also able to take more risk to balance their appetite for higher returns. Then we have the fixed income securities, like bonds, which are having a moderate return, and also having a moderate risk. Okay, so because you know, when it comes to investments, the risk and return is usually directly proportional. So high risk, high return, low risk, low return. So that's how it works. So balance fund try to strike a balance between these high risk and low risk investments. So I want to talk about maybe a simple portfolio of a balanced fund, or yes, a simple portfolio of a balanced fund, assuming that this type of fund is going to just focus on equities and bonds. And I've said that bonds are also called fixed income assets. Okay, fixed income assets. Now, what are the features of this type, being that I've explained what a balanced fund is? I've said that the balanced fund is a type of a CIS, or is a type of a mutual fund that invests in a balanced portfolio. Okay, invest in a balanced portfolio of securities. It can be equity and bonds and also other assets, but for this purpose I just want to focus on a typical balanced fund, which is just investing in equities and bonds, or equities and fixed income assets. Okay, so what are the features of this type of investment? So yes, one advantage of this type of investment vehicle is that there is diversification. Just like I've said, that you see, when you have a portfolio having equities and also having bonds, then, and I've also said that the equities usually have high risk. Okay, an investor who invests in equities is exposed to high risk, and at the same time exposed to potential to high returns. Okay, so and also investor who invest in bonds or portfolio bonds also is exposed to low to medium risk and low to medium returns. Okay, so you find that when you have a portfolio of this, and portfolio, to that person who don't know what I mean by, if I say portfolio, a portfolio is just a collection of investments, a collection of investments in a certain ratio. Okay, yes, so you can say maybe you are having a stock with, for example, a EABL 40%, and you're also having for example a treasury bond maybe to a percentage of what, 60%, all of it summing up to what, 100%. So that one would say that you have a portfolio of two securities, equities and treasury bond. You understand? So that's what we mean by portfolio. So in this context, I'm saying that balanced fund usually have a diverse portfolio. So that diversification is reducing the element of risk exposure. Then another feature is that another feature of this type of fund is that it's having what we call a balanced risk return trade-off. A balanced risk return trade-off. So it means, like I've said, that equities is exposing you to higher return, then bonds is exposing you to low to medium return. So when you're having this portfolio, the higher one, the one which is giving you low return, will, assuming that the market performed well, so the one which is having a higher return and the one which is having a lower return, the one which is having a lower return will neutralize some of the higher returns from the securities, that from the equities. So that one would bring what we call a medium return. So medium, also you can see the name of the fund is called balanced fund. So you find that it will be medium, giving you a moderate rate of return and also exposing you to moderate rate of level of risk. Then another feature is that this type of investment is exposing you to income and potential growth potential. So like just I've mentioned that equities has the tendency or has a feature of attracting potential to attracting what? Higher returns, and bonds also can sometimes offer higher returns depending with depending with the market. Okay, so in a balanced in a balanced fund, in a balanced fund, you find that like I've just mentioned that equities give you what? Give you or exposes you to a potential of high return, like just said that through capital appreciation and also what? Through dividends. And also when you come to bonds usually give you regular returns. They usually give you regular returns because the coupons are usually paid. For example, they usually paid quarterly, or they can be paid quarterly or they can be paid halfly. So it means that after every month you will receive some return from what? From bonds. Yeah, so that's why they are called their fixed income. So because you can predict how much you are going to get after every 6 months. So for instance, if you have an investment or you buy some of the treasury bonds, then after every 6 months you will be receiving what? You will be receiving a coupon payment. You understand? Yeah, so if you strike a balance between this, then it means that it is exposing you to income and also potential growth. So the bond side will assure you a coupon or an interest income after every 6 months. Then the stock or the equity side also will be giving you or exposing you to a potential capital appreciation and at the same time dividend payment. Then another feature attributed to this type of investment is that there is an opportunity to rebalancing, and rebalancing means just readjusting your portfolio. So for example, if you had equity 60% and bonds 40% of the total investment, then you can rebalance, and let's say you do the reverse. You say that now the bond has 60 and also what? The equities have 40. So depending with market condition. Another one is that this type of fund is also good for long-term investors. Yes. So if you're a long-term investor, you can consider this type of investment. Then what are the advantages of you as investor having a balanced fund investment? So one, just as I've said, that there is a diversification, because the portfolio is having a range of assets. So that diversification also reduces the level of risk exposure and also regulate return. Okay. Yes, so also regulate return. Then another one, I can say that it is simple. This type of investment is simple to understand, as you've heard me saying about explaining. It is very simple. It's just a portfolio of what? Equities and bonds. Okay. Yes, and it is being managed by what? By a fund manager. For example, you know, of these fund managers, we have Jubilee Asset Management, we have Britam, there are so many of them. Old Mutual, we have Absa, Shilling, there are so many of them. So all those ones. So it's just money is being pulled, then the money that has been pulled is being invested in this type of arrangement or asset or investment vehicle. So that's Also, I can say another advantage of this, you are exposed to regular income, because I've said that this type of fund, you are having a bond, and a bond, I've said that in bonds we also call them fixed income assets, because you can predict when you are going to receive next coupon when it comes to bond, and being that bond is in this type of balance fund, is form part of the portfolio of this balance fund, then you are exposed to regular income. Let's say after every 6 months you receive what? A payment from coupon. I mean a payment of coupon payment. So what are the disadvantages of this type of fund? What are the disadvantages of this type of fund? So disadvantages or potential disadvantages or demerits of this type of fund is that it exposes you to low growth during a bull market. Yeah, it exposes you to low growth. I mean low growth during a bull market. And what do I mean by bull market? So bull market is when stocks are performing well, when stocks are performing splendidly, then we say that it's the bull market, because investors are anticipating to earn more. Stock investors are anticipating to earn more from their stock investment. So that one we say that it's the bull market, okay? And they're earning more from what? From companies. So it means when companies are doing better, companies are declaring good dividend, they're making good profit, then at that time we say that we are having a bull market. Yes, we are expecting good returns. That's a bull market. So you understand that in this portfolio we are having, so let's say for example if you are investing 1 million and the portfolio is having 40% bonds and 60% equities, then it means that in a bull market, then the return that you are going to get from the equities is only 6% of the invested fund. So assuming that if you would have just invested in equities only, which is totally 100%, so the all 1 million you put into equities, then you would have earned more. Okay, so being that this fund is also having a portion of bonds, then it means that that 40%, which is equivalent to 400,000, you would suffer that loss. Yes, because this 40% was invested in another asset, so it won't tap into the good performance in what? In the bull market. So that one we can look at it as a demerit to this type of balance fund. But at the same time, it's if you're not a greedy investor, or if you are risk averse, then this one will again serve as as advantage. Then we can say that it is not fully risk free, being that I've said that the equities are usually attributed to some level of high risk, some level of risk which is high risk. So it means that it is not free. So only the fixed income portion of this portfolio is one which will help you to reduce the risk. So overall it is still exposed to some risk. So that one also serve as potential shortcomings. So that's all about balance fund. And now somebody maybe would ask, how can I invest in balance fund? So not only balance fund, but also all these other investments that I've been mentioning. If you need to invest, or if you need to start all these type of collective investment schemes, investments, I've said that they are sharing one of the major attributes is that they are affordable. So if you need any of these investments, you can reach out to me through my contacts on the social media platform. Let's say, for example, if you are watching this on YouTube, I have a banner there, then there is my contact there. You can always reach out to me. And also, even for those who are viewing me from YouTube or on YouTube, you can also find my contact there. It's on my bio and on the banner there, so you can just reach out to me. Then I can take you through, I can explain to you all this, and also I can guide you on how to come up with your portfolio to ensure that it's aligned with your risk return profile and also with your investment objectives. So this is this all I have for you in this. I wanted to expose you to in this episode. So please remember to follow me on Facebook if you are not following Instagram, and the same applies to YouTube. Please subscribe if you are not yet subscribing. So please subscribe so that whenever I share these insights, you'll be the first person to have or be notified. Also, when you click on the notification bell. So I think and I believe and I know that you've earned some information, and you learn, you implement, then you expect growth. So you have to do something on the information that we have. If you just have information and you're not acting on it, then it won't make any difference. So please let us purpose to learn, implement, and with that we can grow. Yeah, that's all. Thank you. And also don't remember to like and drop a comment so that I can know your side. So thank you and see you in the next episode. Bye.